Hey everyone, Ian here from Freedom Income. Just wanted to show you this one simple strategy called the mean reversion theory, which a lot of professional institutions use, and it works. It's very simple, to be honest. It's very safe as well. Each time is incremental small gains, but over time is good. Basically, what it is, the mean reversion theory is the theory that, well, this. Let me stress that this strategy works only on or mostly on big cap, high float stocks such as Amazon, eBay, Tesla, the likes of those. Uh, it doesn't really work with a smaller cap or smaller float companies. Market cap is basically how much shares are being, what's the amount of shares being traded, and float is the number of shares that's available to trade publicly. Because small floats, if it's just a few million, it's very easy to move. That's more of a momentum strategy, whereas this mean reversion theory is not a momentum strategy. It's more just incremental gains, but it's very secure, and it only works with big stock because you can't really move them very easily unless if you have like massive amounts of money, which is why Amazon stocks, you hardly ever hear that it's gone up by 200% because it's too hard to move like that. But just to show you how this strategy works, you basically have just one indicator only called the the moving average. You can have SMA or EMA. Either will work. EMA works better, but I have SMA here, so I'm just going to keep it. EMA is exponential moving average. SMA is simple moving average. Basically, what they show is the average closing price of a stock, and you choose. Well, in this case, it's SMA. It's probably better to use EMA. But so, well, let's just do. I'll just go through this with you how to do this, right? I'll take those off, and so to add the strategy, you go here, indicators and strategy, and you type here moving average. Yeah, and you choose moving average exponential. Click that twice. Now you have two, but it looks like one because it's both the same period. So you got to change that. You go here, click here. You change this to 50, and have it blue. And you change this one, whichever color, as long as it's not blue, as long as it's different, just to see a variance between the two, and change this to 200. Okay, so now you have the two moving averages. So basically, the strategy says you buy a stock whenever is in between the EMA 50 and EMA 200. Okay, so if you look at this stock, I would have bought here, sell here, I would have bought here, and probably sold here. I would have bought here and sold here. I would have bought here and sold it here. I would have bought here and sell it here. I would have bought here, sold it here. I would have bought somewhere here. I would have sold it probably here. And again, I would have bought it here. And I probably would, well, here's the thing. You need to put, for this strategy, use a stop loss, which is just under your EMA 200, so somewhere here for the stop loss. Stop loss is basically so that in case the stock works against you, you don't lose too much. You just lose a small amount. Yeah. So, but as you can see, during a period of what is that, like more than a year, about a year there, during a period of a whole year, roughly, you would have won it. You would have made money 5, 6, 7, 8 times, and you would have only lost one. And this is such a simple strategy, and again, a lot of professionals use it. And it's not just this one company. I mean, just check it out yourself. As long as it's a large company that's been trading for a long time, well, that's been uptrending for quite a long for some time. Uptrending is always uptrending. I mean, stocks like Amazon always do that anyway. Like Apple, if you do Apple, it'll be the same. It works with all of them. I mean, you look at it here. You buy here, sell here, 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 and you would have probably, you haven't even lost there yet, but you would have a stop loss here and you would have lost there. Again, you would have won like 7, 8 trades and only lose one. So the strategy is very simple and it works like with big companies like that's consistently uptrending. Make sure you're doing it. You make sure you use it on a up. Well, you could use it on a downtrend strategy, but you'd be shorting the stock instead of buying the stock. Well, so that's a different story. I can show you that another time. So, So yeah, as long as it's an uptrending high cap solid stock, you can use the strategy. It pretty much works all the time consistently during good market conditions. It will not work at the moment with COVID-19 because with COVID-19 you see every single stock. Wait, let's just see. Yeah, like every single stock seems to have done something like that. No matter which stock. I mean, like 90% of stocks did that during the COVID-19. It just boomed because, for obvious reasons, literally 90% of all stocks. However, this is where you would buy and you would hold it until it goes back up. You could have made money on literally 90% of stocks if you did that. There's no better time to invest than a market crash. After a market crash, that's where most of the money is made on the big on the good stocks. Personally, I got no less than 30 stocks, and so far 29 of them are winners, only one loser. But during this market condition, during the timing, is quite as good to buy. Yeah, so that's a very simple strategy anyone can do, and it's very simple. You could, do it like you have. For this strategy to work, I would use interactive brokers because you can do trades quite quickly and you can set stop losses. Is the way to do it. And interactive brokers, very good platform. It was voted as the best broker out there by Barron's. I would say it's probably the top 3 for sure in the whole world in terms of trading brokers. A lot of professionals use it. I mean, most professional I could do another video on brokers alone. Most professional traders use a broker called TD Ameritrade. They use the Think or Swim platform, which is really, 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 really good platform. But to be honest, between TradingView and interactive brokers, you can achieve the same, but the commissions are a lot cheaper and the service is just as good in my opinion, to be honest. You don't want to be using Robinhood or the one like that, because they're commission free, but their execution speeds is so bloody slow. Like you're saving pennies to lose pounds. In trading is quite important that you execute quick, and interactive brokers are brilliant at that. So you can open a paper account, demo account, and just practice this strategy with interactive brokers. You can even start pretty much as soon as this COVID-19 sort of ends and you get a good trend like that. You can use this strategy, and the win rate is so high and the risk is so low with the strategy. As you can see, it works with every big cap stock. So I hope you like that. If you have any questions or if you want to see any future videos, please bang me a message and I shall make more videos for you. Yeah, thank you. Enjoy.